Okay, great. Thank you very much. And in our next segment, we're going to cover really the key topic on digital assets investment trends. Now, it's going to be the toughest time of the day because it's just after lunch, but I'm sure all the panelists will give a really exciting session today. So before we actually start, we're going to get the panelists to do a very quick introduction of themselves, and we'll jump into the discussions and hot topics very shortly. So starting yourself.
Thank you, Ajay. So I'm Lasanka Pereira. I'm a co-founder of Independent Reserve, an Aussie crypto exchange. So about 10 years ago, we walked into Steve's office, and Steve and team kindly let us present our big, crazy idea of building a secure, robust, scalable Bitcoin exchange to serve Australian customers. And in that, I was a kid in my 20s with a flowing head of hair. Lots happened, but in the last 10 years, we've kind of, served a few 100,000 customers, helped them buy their first Bitcoin and other crypto assets. We've done tens of billions of dollars of volume, and a couple of years ago, we got the very first license for a crypto exchange in Singapore. So so it's great to be here. We wouldn't be here if it wasn't for the platform that Wholesale Investor gave, and so thanks very much.
Hi, good day to all. My name is Clarence. I'm the CEO of Custody Plus. Custody Plus is a MAS licensed custodian for digital assets. Custody Plus is a wholly owned subsidiary of VC Plus Limited, which is a Singapore-listed fintech company. So we provide safekeeping of digital assets as well as reporting capability relating to the digital assets for MAS or for other regulatory compliance. Thank you.
Hi, good afternoon, everyone. So my name is Fong Jack. So I'm the founder and CIO for Jubilee Capital. We are a MAS registered fund manager and started in 2015. And I have two funds that was launched in 2016 and 17. One is a tech fund, the other is a blockchain fund. So I was lucky to be to launch a fund during the boom time of the crypto. And we have exited from the crypto fund, and I've done a few investments in different so-called securitized tokens and the normal unregulated tokens. So I'll be happy to share some of the experience for some of the projects with you all.
Hi everybody, good afternoon. My name is Sunny Mohanty. I am the Vice President of Nordek for the APAC. So what is Nordek? Nordek is a layer 2 blockchain solution which is built on Ethereum. So we are EVM compatible. Maybe you've heard of Polygon. We could just sort of compare us with a Polygon. We are based on delegated proof of stake mechanism. Currently, we are a zero gas fee protocol blockchain solution and EVM compatible. Besides being a layer 2 solution, we also have a set of products from our ecosystem. The first being a crypto debit card called NordPay. We have a Web3 banking solution. Currently, we have received licenses from Lithuania and Switzerland for that Web3 bank solution. We also have partner solutions like a swap, a DEX, and a bridge solution. We are also building our own decentralized exchange DEX and a centralized exchange as well. So yeah, we are, if somebody is looking for a holistic sort of solution, then we are like one-stop solution for your blockchain needs. Thank you so much.
Thank you. And I'm Lim from VisionGroup, and I'll be the moderator for today. So before we actually start and jump into the questions, I'd like to shed some light on the context of the cryptocurrency market cap and market over the last couple of years. So we first broke the $100 billion mark around the mid-2017, and within the same year, it grew to more than 8 times to more than 800 billion. 3 years after that, in 2021, the crypto market broke the 1 trillion mark and grew almost 3 times within the same year. Now we're just 3 years after that in 2021. what will 2024 hold for us? That's something hopefully some of the panels will give us some light into. At the same time, from a comparative basis, Bitcoin in terms of percentage market or contribution towards market cap grew from 2018 to 2023 about 39% to 46%, which is pretty all right. 12% to 18% for Ether, but for stable coins such as USDT, it grew from 0.24% to 7.5%, which is huge growth itself. DeFi market, 2018, 3 billion, 2021, and 173 billion. We are just now hovering around the 43 billion mark. So, as we go into the first question of the day, and as we all know, we're going to have elections tomorrow for Singapore for president, we'll be asking the first question in regards to regulation itself. So just 2 months back, MAS proposed a framework for open, interoperable, safe, and efficient digital assets networks. MAS is expanding one of its key projects, Guardian, where some of the major financial institutions such as HSBC, UOB, and UBS, Standard Chartered, DBS, piloting asset tokenization across both the assets and wealth management, fixed income, and foreign exchange space. So the first question very much to the panel, it's, in your view, how important is the role of the government in shaping the digital assets investment trends in Singapore? First to you.
Thank you, Lim. Yeah, so, I love the idea, first of all, that, tokenization, enabling big corporates, kind of scope to be able to build these products. I think that's fantastic. Tokenization of real world assets, I think, is going to be a pretty big theme over the next few years. This will create jobs. This will, attract more capital to Singapore. That's fantastic. I personally believe what got me excited about this space 10, 11 years ago was Bitcoin. It's just this unstoppable money with a provably computationally scarce asset. And I saw this as something that would improve human rights, enable people to hold their own value. And ultimately, this is a permissionless, decentralized network that anyone could participate in, build on, hold your value, and you're never going to get debased, and you can't. So this is the background of how I came into it. So I personally think the faster innovation will happen on open, public, permissionless networks. But I think Singapore overall are doing a great job in terms of guiding the digital asset investment space. But I think that over and above that, I think what Singapore's done is it's created, it provides stable regulation, stable government, favourable taxation, rule of law, IP protection. So it's first and foremost a great place to build a business, raise a family. So I think these are a couple of the key things that I think is great about Singapore. And I think Singapore is just going to thrive from the fact that it is becoming an even bigger hub for asset protection, where some of the other jurisdictions around the world are falling away. I'll leave it there.
Perfect.
Clarence?
Sure. I think any catalyst of change, whether it's business or social, brings implications. Implications, whether it's positive or negative. And involvement of all stakeholders is critical to ensure the particular new sector can evolve and develop without stifling innovation and adoption. So I'm very happy to have government coming in, giving guidance and advice. So the role of government is critical because it provides an environment that is for sustainable development of digital asset. Of course, the question will be what kind of parameters will be put into the sector without stifling innovation and adoption. Thank you.
Thank you.
Yeah, I echo Clarence and Lasanka's opinion as well. I think it is a big plus for government to be involved, to provide guidelines to help the sector weed out bad actors. From day one when I was involved in this sector, I've seen a lot of projects, and the moral hazard risk is actually very high, because when innovation is really being pumped up and a lot of players are coming in without any guidelines, there's the risk of people misusing the tool is very high and can be very, very damaging. Think of all the P2P lending at the time when there's a lot of tokenized lending platforms or proliferating in the sector. So it's very important for the government to be involved. But I think it's just a balance. The innovation or the guidelines should not weed out innovators as well. So we need to encourage more entrepreneurs to develop, whether it's D-apps or DEX or NFTs or metaverse. There's a lot of application. And as long as the guidelines are clear, then I think the whole sector and ecosystem will become better and better. So personally, I'm definitely for it.
Yeah, I think I echo to what my fellow panelists have just spoken. I think we've realized that we need government's intervention when it comes to crypto or digital assets, especially in Singapore, because I travel a lot. I've seen other countries as well, but Singapore is very different. I started my career during the ICO days back in 2017, when Singapore used to be like hosting, investment meetups, and there was no clarity on what these ICOs are, what these projects are doing. But they introduced this Payment Services Act in 2020, and after which it was very clear that for a digital asset service provider, for instance, like a crypto exchange, to operate and do business in Singapore, you have to have this license. So government's involvement has been has proven that Singapore is seen as a crypto hub, but it's unlike other jurisdictions where the regulatory framework is not clear, the mode of doing business is not clear. But with Singapore, I totally agree that things are very clear. And even when the initial coin offering ICOs were introduced, they also introduced the different guidelines for having ICOs. For instance, like a blockchain company, I can have a foundation here. There's a lot of legal clarity also there in Singapore. A lot of help is offered here to companies and startups and entrepreneurs. For instance, we want to incorporate a foundation here. And we spoke to various people who are representative of government also. And they give us complete guideline how to operate here. If you are into crypto payments, or you are establishing a blockchain foundation here. So, and in terms of the anti-money laundering and the counter-financing terrorism regulations are also very, very clear. So in overall, I would say government plays a very important role, especially if you are a digital payment service provider in every jurisdiction. But however, I think Singapore is in the forefront, as for me. Thank you.
Okay, I guess it's always the toughest point on how we really balance innovation as well as regulation. But we all do know that once regulation do kick in, it shows the maturity of the specific industry and potentially how all the things actually come together. And primarily, I guess Singapore always holds towards its trust, towards making the place and ecosystem and infrastructure a safe place for people to actually be in. And that then is able to attract a lot of other people to come here. So on a separate note, just last month itself, Temasek announced that it would stop investing in digital assets due to regulatory uncertainty. And I think we have a great panel today because whether it's from an exchange, a platform, from custody, from a fund, from technology, so-called platform itself, I guess we want to hear some of the perspectives on how this news would actually impact the investor sentiments towards digital assets. Sanka, what's your view on this?
I think if you've kind of seen the potential of decentralized networks, permissionless networks, crypto, Bitcoin, blockchain, I think if you're a Web3 builder, you've got fire in your eyes, I think this has really no impact on you. But I think who it may impact is, I guess, a small portion of the people that are on the edge, that haven't quite looked closely enough in the retail. So we might see, 100 million people that might come into the retail next bull market, into the sector in the next bull market. News like this might affect like 10% of those people that might take a step back. But overall, news like this, I think, doesn't impact the mood too much, certainly doesn't change the positive impact this can have on population.
Regulatory clarity is important for all investors, not just institutional investors like Temasek. You and I as retail would also want regulatory clarity on it. And in fact, this regulatory clarity not only applies to digital asset, in fact, it applies to all asset classes that investment is available. So the investors will need to evaluate based on the risk-return profile. Blessing in disguise is that regulations throughout the world now has more clarity because each government is introducing the framework. So it's just unfortunate the investment of Temasek ended up this way. I believe going forward there will be more digital asset products emerge, and these products will provide attractive value propositions to different category of investors. Yep. Thank you.
So I would add that actually regulation is meant to protect investor, and especially unsophisticated investor, retail investors, and investors who don't do their homework, right? But the thing is, investors must learn not to follow the lead of any branded investors without doing their homework, because there's a lot of herd instinct, groupthink behaviors in the investment community. So just because there's a big branded company, investors that have invested in a particular deal, it doesn't mean that you should trust the judgment and the decision of the investor 100% and just follow suit. Unfortunately, in the investment community, there is a lot of such behaviors, and you always look at who is a lead, and if the lead is a good brand name, then the other co-investors will just want to jump on without doing any of their own deep dive due diligence. So I think this is a very good wake-up call for Temasek, right? And I mean, I worked with different Temasek companies in the past, so I've seen how the issues have impacted. When the investment team is on the ground, when they assess, sometimes the type of due diligence done may not be complete, right? So just because there's a so-called Sequoia of the world or the A16Z of the world, the big brand name they are in, the investors should not just jump in. So I think this is a good thing from my point of view personally. I think it's very good that we have such incidents blowing up, and all the institutional investors, family office investors, individuals, they should review how they invest, right?
Don't do DD by proxy. Do your own DD, right, Fong Jack? Don't do DD by proxy.
Yeah, of course. No, because a lot of investors don't want to spend time to do their homework. They don't want to be the lead, and they always want other people to take a lead, do all the duty, do all the deep dive and evaluation, and just want to say, okay, are you in? If you're in, I'm follow you. So this is a very lazy way, and I hate it, right? I've been a lead investor in many of the deals, but I hate it when co-investors just want to jump on board and say, okay, if the deal fails, they point a finger at you. I say, okay, it's your fault, right? Because you didn't do a duty. But are you paying me? No, you're not paying me anything. You're not sharing your profit with me. You're not sharing the upside with me. And just to give you an example, in my fund, when I started the crypto fund, I had a few experimental investments where I invested in ICOs, right? A few of the ICOs. There are a few projects that I put in. Okay, I'll just give you an example. Some of these co-investors who put in with me, they put in $50,000, they get back $1 million within 3 months. And they pay me nothing, right? So they say, oh, you've done a good job. No, thank you very much. Or you're so fantastic. Can you run your next fund? So what are you paying me? You're not paying me anything. And they don't have the so-called decency of offering some rewards. So it really opened up my eyes to look at some of these investors who are lazy and you don't do your homework just to take advantage of other people's hard work. Please don't come and don't work with me. So I'm sorry, I'm a bit emotional.
We can feel the fire. We can feel the fire.
Yeah, I mean, I think I totally agree with my fellow panelists. Like, even though like Temasek is a very notable institution in Singapore, and they have a big influence on people in Singapore who are investing into crypto or digital assets or are very much interested to explore a different digital asset. So they have a notable sort of influence, I would say, especially in Singapore. It caused a lot of negative sentiments. Like I remember after FTX fallout, people were they're just questioning, like, are you still going to be in this space? Are you going to move out of this space and go back to traditional finance or something? So I was being questioned, everywhere, especially in Singapore when I went, and globally also. It had a very ripple effect with FTX, bringing a bad name, and Binance, sort of being one of the investor. But I think I don't think it's a how to put it, it's a negative thing. I see it like, the market is getting matured, like, correcting itself. We learn from our mistakes. Crypto, digital assets are pretty new, right? They're still in a very nascent stages, I would say. Not everybody, even though I've been working in this space for quite some time, there are still many things I don't understand yet. Especially the FTX, who would have thought they didn't have proof of reserves? And, you get into this technicalities of when things go wrong, you start, sort of venturing into the details, right? What went wrong and why? And why did that happen in the first place? That's when you realize, oh my God, this is like the tokenomics itself, So these are very technical aspects, legal aspects to this space as well, that is still evolving. If you speak to lawyers also, like a couple of years back, they're not very sure about the legal clarities. And today people are telling me you can have a token issuance company out of a Cayman or a BVI, which is more crypto friendly, and a foundation registered in Singapore, if you would like to do that. But there are other people who are advising otherwise. So there are still gray areas in this space, and this space is maturing. I would say that we still are very hopeful about the technology, which is the blockchain technology, future looks bright, and yeah.
Exciting. So I guess in the audience, there might be some who are new to so-called investing in digital assets. Some might already have embarked for many years. But some of them in the audience might be thinking, what would be the pros and cons in investing into crypto? Whether is it via regulated exchanges, a DeFi platform, or through structured funds? What are your thoughts on that?
I guess if you're using an exchange, it's going to give you a bit more flexibility. You can, trade in and out really quickly. You might be able to, you'll be able to, they'll custody the assets for you. You might be able to generate yield on the platform. But most importantly, what an exchange allows you to do, it gives you the option to withdraw your own assets and self-custody, which I think is a very, very important life skill to have going forward. And then but the trade-off there is you have to make a call on the creditworthiness of that exchange. Are they doing all the things right by consumer protection? How's their corporate governance? How well are they regulated? And how many jurisdictions do they have cold storage insurance? What's going to protect you if something happens to the exchange? So you've got to make that call. And I guess there are some like tenure, regulation, audits, working, the kind of people that sit on the board. What kind of major partnerships do they have? These are kind of trust signals you can follow, as opposed to if you're using a fund. It's passive exposure. It's easy. It fits in with your reporting and your taxation, but you don't have the flexibility to move your assets and trade your assets. So, and often these things will have regulated funds will have protections built in, like custody, like insurance. So I guess you just got to evaluate. I think a lot of people that are retail often will come in, high net worths in particular, they'll come in with passive exposure with like a fund. And then, as they get a little bit further into the weeds and, they try to experiment with more, self-custody, holding your own assets, doing your own staking, running notes, things like that.
Every investor would want their investment to be safely and properly executed and safeguarded. So this fundamental interest carrying out the transaction through a license exchange for a fee provide that confidence to the investors. So for investing through fund, basically is outsourcing the investment analysis and execution to a professional party for a fee as well. So what I would highlight is that it all depends on the individuals or the entities' investment preference. So working with licensed players, of course, it provides the confidence and certainty that the investor can just focus on the investment itself. The other aspect of the investment relating to settlement recording is handled by professionals. Thank you.
So I would say it depends on how much time and effort you want to put into investing. If you want to take a more hands-on approach, then I would encourage you to go down to even handle the token itself so they can get a feel. Because I see a lot of so-called investment professionals. They talk about the familiarity with Bitcoin tokens whatsoever, but many of them have not really touched the actual token. They have not really operated hardware wallets. They have not gone to the different websites to do actual trades, and a lot of it is theoretical. So again, depending on your assessment of your own investment style. So if you think you can spend more time and you are interested in the token, then I would encourage you to go down to the really basic layer one, operate the wallets yourself, try to do a few trades yourself, do a few trades on the exchange or on a decentralized exchange or centralized exchange, so they can get a feel of this product. But if you don't have time, then of course you can work with funds, pay a fee, so they can help you do the more professional handling of the investments. Or if you are a bit concerned about being too close with the tokens, then you can also invest in proxies, right? Like all these listed companies, Coinbase and all the other listed companies who have, or even indexes, right? So that will be a 2-3 steps removed from actually the touching the token itself. So a lot depends on what kind of style of investment you have. Yeah.
I think this is a very interesting question, and I would like to answer it differently in the sense, because we are fundraising, we are a blockchain company, we've closed our Series A, because a lot of people come to us who do not know anything about blockchain, and they want to invest, they want to diversify their portfolio, and they ask us, how do I invest into your company? You are a blockchain company, but you also have a crypto element, like the token, the native token that we have. So we get asked this question a lot, and these people really want to have equity, which is like a shareholding in the company. They just don't want to hold tokens. So this is a very interesting discussion with the investor itself, depending on their risk appetite. If you do not know anything about digital assets, you do not know anything about blockchain, but you have the investment, you want to diversify a portfolio and you want to invest into a blockchain company, then we would rather have them go via a fund manager or a financial advisor who can advise them the risk associated, right? The risk associated, because ticket size goes up. When you're asking for equity in a blockchain company, the ticket size can be millions, 10 millions. I mean, I would just an example. It's not like a few $100s, it can be in millions. So you have to do your proper due diligence, go to people who, a lawyer, a financial advisor, a fund manager, and go via that route. But if you're a day trader, for example, you are a retail trader, right? You want to trade the popular cryptocurrencies, your appetite is very small, then you can go on a Coinbase or you can go to any exchanges, Binance, CoinHacko, licensed, unlicensed, whatever, operating in your country or country, and start trading in a few hundreds. Okay, the risk is less, the risk is low, because you're not going to lose a lot of money, right? So it again depends on the individual and how much risk appetite you have in terms of your investment amount. So but again, it boils down to the fact, even though starting out, you should do your homework. If you are not sure about which project, because if you go that top 20 tokens and the market is very speculative, there's a lot of volatility in the market, you get confused. So many things happening. Which token can I, which coin can I invest so that I get returns? At least I don't lose my money. So better, if you are unsure and your risk appetite is low, go and seek proper advice from financial advisors or fund managers. Yeah, thank you.
Thank you. So one of the exciting things is that Bitcoin's 4-year halving will occur probably in the next 6 months or so. And historically, very much, it really drives prices up. Now, how does this impact your investment strategy? What do y'all think will happen in the next short term, 1 or 2 years? And maybe in the longer term, the next 3 to 5 years?
So for me, so what's going to happen? Bitcoin price, just to give, just a bit of an explainer. So right now, the Bitcoin block reward every 10 minutes is 6.25 Bitcoins that go into circulation. In about 8 months, I think it's March 2024, this will drop to 3.125 Bitcoins every 10 minutes. So it goes from 900 Bitcoins a day to about 450 Bitcoins a day. So the supply, the sell pressure will drop by 50%. Meanwhile, what we've seen is with increased regulation, with incoming ETFs, every time a fintech platform or an equities broker or an app enables people to buy crypto easier or get exposure easier, the demand side story gets stronger, and then the supply is going to drop. So in the last 3 Bitcoin halvings, what's happened? So in 2012, in the 6 to 12 months after the 2012 halving, the Bitcoin price went up by 9,000%. 2016, it went up 2,800%. And in the last halving, it went up about 600%. So this is what's happened. And I suspect, supply tightens, demand grows stronger, the rails get better and easier, the price will once again go up. I guess that's what I'll see. From a asset allocation investment perspective, doesn't change. I don't change too much personally, but how I make resource allocation decisions at Independent Reserve, that changes. So, for example, 2017, up until 2017, we'd onboarded 10,000 customers in 3 years. In the next 3 months, we onboarded 90,000 customers. So, we're placing ourselves for a situation to handle a situation like that in the next 8 months, in the next couple of years. So if we get 1 million customers, they get a super smooth onboarding. We have enough support staff to speak to them. Our banking is going to be smooth. Our settlements are going to be smooth. And so I'll position Independent Reserve and the team around that. I'll leave it there.
Digital asset as an asset class is a form of diversification for investors away from other traditional asset classes like equity and bond. So in short term, I believe investors will still be evaluating digital asset like how they evaluate other asset classes. In the current climate, we have a lot of geopolitical tension, high interest rate. So the investors will evaluate digital asset with more of the prospect of how these products will eventually evolve. And I believe there will be more digital asset products emerge instead of just the spot BTC. Now we are hearing about ETF, all these are coming on stream. I think what is important would be the regulatory certainty will provide the healthier development of digital asset as an alternative asset class for diversification. And investors will have to be mindful that there are licensed infrastructure service providers like Independent Reserve, Custody Plus to handle a big chunk of the investment processes. So of course, it's up to the investors whether they continue to invest in other venues with other players. Thank you.
So personally, I've gone through a few cycles. So I would advocate allocating some small percentage of your portfolio to hold some digital assets. And of course, Bitcoin will be a very good asset that you can start with. You can choose to go with a licensed operator if you don't want to be bogged down with a lot of technical handling of the tokens. But if you want to get a bit more exposure and learn a bit more, I would encourage that you can actually hold the Bitcoin yourself, right? And there's not much cost to it, and you don't need to pay for all the custody fees whatsoever, but you need to know what you're doing, right? So that will cut down the cost of holding these assets. And you must know how
Independent Reserve will hold your assets for free.
Say it again.
We don't charge for custody.
Yeah, or you can use any of these service providers.
Yeah, absolutely. So we've seen this. This is a big event in cryptocurrency space, like the Bitcoin halving. So basically, what happens is that supply goes down, right? We have Bitcoin halving. So supply goes down, which supply goes down means demand goes up, and when demand goes up, we think that by default the prices would go up again. But again, as everybody mentioned over here, a Bitcoin is a digital asset, and you should go through all licensed service providers and the crypto exchanges we've learned from FTX. So we like to, I play safe. I like to, I trade with licensed exchanges in Singapore only. So probably Bitcoin is slightly different from other top currencies, tokens we have like Ethereum. I would say Bitcoin is a digital gold, which means you see it as a store of value. I'll hold it. I would not trade it or not sell it. That's just me, my personal opinion.
Thank you very much. And we're very much coming to the end of the panel. I'm sure there are many key takeaways and great takeaways that the audience has. But if there's going to be just one that you're going to leave them with, what would be that one key takeaway each of you will give them today?
In addition to the Bitcoin halving, which has a huge impact on the entire crypto complex, I'm quite excited to see the rapid growth of stablecoins. So stablecoins have grown in market cap from about $3 billion 3 or 4 years ago to now over $120 billion. There are 25 million active wallets that hold Bitcoin stablecoins, and maybe 20, like a large part of that hold. Like 20 million wallets hold more than $1. About 5 million wallets have between $1 and $100 worth of stable coins, and they transact every week. So they're sending and receiving every week. And this is now decoupled from exchanges and trading. So even though exchange trading volumes have dropped, stablecoin activities increased. This tells me, this is helping with remittance. This is helping the underbanked, and this is something that I felt really passionate about. So, I hope to see more stablecoin growth like we've seen in the last few years, and I think this will ultimately benefit so many people around the world. So, stablecoins have found product market fit. So, I'm excited about that.
Digital asset will be an attractive asset class for diversification for investors, whether it is institutional or retail. So when a new product comes to market, there's always time for it to stabilize, to come to an equilibrium before a greater adoption will take place. So personally, I believe the digital asset has great prospect, but every investors have to do their homework, have to able to stomach the volatility or even to the extent of complete loss. All right, so that is something you have to bear in mind. Thank you.
So I would say that you encourage you to open an account with one of the licensed operator, buy few dollars of stable coin, USDT, USDC, and you can observe the different tokens that's out there. Maybe the application is something that you can identify with, and try to create 1 or 2 transactions. So get a feel of how things work within the ecosystem. And the more you get involved, the better you can understand it, and then watch the space and how MAS is guiding the industry through all this new announcements, regulation, especially the stable coin, a single currency stable coin. So that is a very big trend. It will drive a lot of new application in the tokenization trend. So I think that's very exciting. That's up and coming. So I would encourage you just go and try it yourself.
Yeah, I totally agree with my fellow panelists. One thing I would like to ask, if I were to start today, if somebody asked me go and invest or trade or whatever with a crypto, I would just go and take some classes, like online classes. There's so much e-learning classes and courses on blockchain basics, cryptocurrency basics, digital asset basics, non-fungible tokens. There's so much of information out there. I would just go and first get a certification done. Once I'm little bit sure about what this technology is or what the use cases are, probably then I would go and then start with an exchange to play safe, go to a licensed exchange, and again, maybe $5, $10 worth of Bitcoin or USDT, USDC, or ask a friend who has already been in the space, who already has a digital wallet. Ask him or her to show you how to download or open a digital wallet and transact or transfer USDT, right? So these are some of the basic things that you could do. Ask your friend and families and the extended community, because we all attend these kind of conferences. The whole idea of attending these kind of conferences is meeting people who have been an established player, so we can learn from them as well. So yeah, this is all about learning, networking, and testing out before you realize you really want to have this diversification, or this is not for you. So that's all I have to say. Thank you.
Thank you very much. Some great key takeaways. You have been a great audience. You have been a great panel. Thank you very much. Thank you.
Pleasure.
Thank you very much.
Thank you to all our panelists. That was an excellent discussion, which should provide some direction for those looking to operate in the fast-changing digital asset space.